Welcome to our lesson on the bond market. In this financial marketplace, investors buy and sell debt securities, primarily bonds. These bonds are issued by governments, municipalities, and corporations to raise capital. When you invest in a bond, you are essentially lending money to the issuer in exchange for periodic interest, payments, and the return of the bond's face value when it matures. Let's take a closer look at some key concepts in the bond market. Issuer. This is the entity that issues the bond, whether it's a government or a corporation. Coupon rate. The interest rate the bond issuer will pay to the bondholders, usually annually or semi-annually. Maturity date. This is the date when the bond issuer must repay the bond's face value. A face value, par value. This is the amount paid to the bondholder at maturity, typically $1,000 per bond. Yield. This refers to the return an investor gets on a bond, which is influenced by the bond's price, coupon rate, and time to maturity. There are different types of bonds to consider when investing. Government bonds. These bonds are issued by national governments and are considered low risk. Municipal bonds. Issued by local governments, these bonds are often tax exempt. Corporate bonds. These bonds are issued by companies and typically offer higher risk and return compared to government bonds. So why should you consider investing in bonds? Income. Regular interest payments provide a steady income stream. Our diversification. Bonds can help balance risk in an investment portfolio. Safety. Especially with government bonds, they are generally safer investments compared to stocks. It's important to understand the relationship between bond prices and interest rates. Bond prices and interest rates have an inverse relationship. When interest rates rise, bond prices fall and vice versa. This is because new bonds will be issued at current, higher rates, making existing bonds with lower rates less attractive. Understanding the bond market is important for investors to manage risk, achieve diversification, and generate income. Whether you are new to investing or looking to diversify your portfolio, bonds can be an essential part of a well-rounded investment strategy. Thank you for joining us for this lesson on the bond market.